Welcome back to Markets in Motion, the podcast where we break down what's shaping the world economy in plain English. I'm your host, Alex, and today we're tackling a topic that moves everything from grocery prices to Wall Street, the US dollar.
And I'm your guest, Sarah. Always great to be here, Alex. I love that we're talking about this because, honestly, most people hear the dollar went up or the Fed cut rates and think, so what? But those shifts can change the global economy.
Exactly. So let's start simple. Why does every little thing the Federal Reserve says seem to make the dollar tremble or strengthen?
It's because the US dollar isn't just America's currency, it's the global benchmark. When the Fed changes interest rates or even hints at what it might do next, investors everywhere react. If the Fed cuts rates, dollar-based assets become less attractive, and money starts flowing to other currencies.
And we've seen that recently, right? The Fed cut rates last week. Traders are now glued to every Fed speech to see if that easing cycle continues.
Exactly. Meanwhile, the Bank of Japan has turned more hawkish, suggesting it might raise rates soon. That gave the yen a little strength against the dollar. And the UK, with its rising public borrowing, saw the pound weaken. Investors worry about higher debt.
So it's like a global tug of war. Every central bank move tugs the dollar one way or another.
Perfect analogy. And don't forget China. They've kept rates steady for 4 months. That cautious policy affects not just the yuan, but investor sentiment across Asia.
I love to think of the dollar as a thermometer. When global uncertainty rises, everyone runs to the dollar as a safe haven.
That's spot on. During crises, people buy dollars. When confidence returns, they diversify again.
Let's get into the why. Why do these speeches and small changes matter so much?
Because markets trade on expectations. When a Fed official says, "We're watching inflation closely," traders start recalculating. Will there be another cut? Will yields fall? The market reacts not to the facts, but to the story about what comes next.
So it's like financial theater. Investors react to the script before the play even ends.
Exactly. And that narrative shapes the dollar's value in real time.
Let's make it practical. What does all this mean for a small business owner or investor listening right now?
For individuals, diversification is key. Keep part of your savings in dollar assets if your local currency is volatile. Even a dollar savings account can help hedge against devaluation. For businesses, use forward contracts or swaps to lock in exchange rates. That way, you know how much you'll pay in a few months, even if currencies move.
Right. You avoid those nasty surprises when the dollar suddenly jumps.
Exactly. Many emerging markets learned that last year. Their debt payments in dollars got way more expensive when their currencies fell.
That's balance sheet pressure, right?
Yes, exactly. When you earn in one currency but owe in another, any depreciation makes debt heavier.
So who wins and who loses when the dollar moves?
Exporters can win. Their goods get cheaper abroad when the dollar is strong. Importers lose since their costs rise. And traders, well, they love volatility. That's their playground.
True enough. But for the rest of us, dollar strength often means higher import prices. Fuel, electronics, even food.
Exactly. The dollar's move can pass straight into inflation.
Looking ahead, what should people be watching right now?
Top of the list, speeches from Fed Chair Powell and other officials. Then, any changes from the Bank of Japan or new fiscal data from the UK. Those could all shake markets. And keep an eye on U.S. inflation, the PCE report, and employment numbers. They drive expectations.
So we're really watching the storyline. What comes next, not just what's happened.
Exactly. The dollar reflects tomorrow's expectations more than today's reality.
So final takeaway. Diversify, hedge, and stay informed. The dollar is still the world's pulse, and learning to read its rhythm helps you protect your wealth.
Well said, Alex.
And Sarah, thank you so much for joining us.
Always a pleasure.
And to our listeners, stay curious, stay informed, and remember, behind every market move, there's a story worth understanding. This is Markets in Motion. See you next time.